Hey everyone, and welcome to the last week of direct instruction for economics. Towards the end, I'm going to kind of give you some instructions on how we're going to finish up the year and show you how to access the Google Meet, and hopefully a lot of you have logged on so we can get anything cleaned up for the end of the year. But I want to jump right into our stock market simulation. So if you got into Google Classroom last week or joined the Google Meet discussion, we went over what went into a stock ticker and the different symbols and what they meant. And if you want to eventually invest in the stock market, where you remember stock is ownership in a company. So every share of stock you own is a share of ownership in that company, and you can accrue wealth by investing in stocks and companies if they do well. So we're going to show exactly what it means to invest in a stock by doing a simulation. Now, the simulation would usually be done in class over about 8 weeks, and there would be a winner and there'd be some extra credit, but basically the person who made the most money or built up the most equity, which is the combination of the value of your stocks plus the cash you have, they would have won, and it would have showed kind of how you can gain using the stock market. But this is how the simulation works. You're going to do it on your own. You're going to do it over the course of the summer. So what you're going to do is you're going to use stock tickers to track stocks that you make fictional trades with. Now, my personal favorite trading website is on the screen here. It's Yahoo Finance. It's really easy to read. E-Trade, CNBC, lots of other websites have this too. But this shows you kind of exactly what goes into a stock, and the simulation is going to show you how to read it and what's important. So for this simulation, you should have a PDF file in the for the week on Google Classroom that looks something like this. And what you're going to do is you're going to track trades, and you're going to make fictional trades, meaning buying and selling of different stocks over the course of the summer. So like I said, you're going to start off with $100,000, so I already have that in the first line. You can do that too. And we're going to make a fictional trade right now, so I show you how it works, and then you'll be free to make some more trades and engage in the direct instruction. So I'm going to go back here, and today what I'm going to do is I'm going to buy shares of Walmart. Okay, so we're just going to walk through this sheet here. This is the stock ticker for Walmart. And one thing to remember too is that the stock market runs from 9:30 a.m. to 4 p.m. every Monday through Friday. That's not a holiday. That's Eastern time, so it's really 8:30 a.m. to 3 p.m. our time. After that, after 3 p.m., no more stocks can trade. It kind of gives companies relief and a chance to relax before the next business day. So I'm going to go back and forth between these sheets to kind of show you how it works. So on your sheet, you'll just fill things out from left to right. So we're going to make a trade today, 5/27. Actually, I'm making this video on the 26th, so we don't get confused here. Let me go back here. Company name is always up here in the top left corner. Again, we're buying stock, shares of stock in Walmart. So I'm just going to put Walmart here in the box. Now the ticker symbol is how to easily look up companies. Every company has their own unique ticker symbol, and it's usually going to be in parentheses up here by the name. So Walmart's ticker symbol is WMT. It's how they're known on the stock market. So looks like that didn't save. Okay. Walmart is the company name. The ticket symbol is WMT. Why is this not saving? There we go. And what we are going to do today is we are going to buy. Now, over the course of the summer, you may sell. You may make some money on a stock, or a stock may stop doing so well. And so you want to sell your shares before you lose all your money that's invested in it. Or you may want to sell your shares, take that money, and buy more shares. Really, it's up to you. Now, I'm going to suggest you purchase in quantities of 100 because that makes it easy. And a lot of companies, you have to buy 100 shares of stock, at least initially, to get in. So I'm going to go with that. You can do what you want, but this makes things really easy. All right. Now let's get back into what the different ticker symbols mean. Price per share. Okay, this big number right here is how much it costs per share, and that's a dollar amount. So every share of ownership in the company is worth $123.86. Now, the number of shares owned in Walmart is here, down here, if you want to see it. So there are over 7 million shares of Walmart out there at $123 a share. You can see why Walmart is worth a lot of money. Now this graph over here shows the value of shares over time, and as you can see, there's been a huge drop off, but that's because a lot of companies have seen that drop off in the coronavirus. A lot more goes into the stocks than just people buying the stocks, and unfortunately we didn't get time, but if you go into a college level introductory class, they'll go macroeconomics principles, you'll get into it. Okay, so let's go back to our sheet. Price per share was, let me look again here, 123.86. Now, every time you make a trade, somebody has to do it for you. These are stock traders, financial advisors, stockbrokers, people who trade for you. They actually have access to the stock market floor, and they have to make a commission or a fee. Now, some traders take a percentage of your earnings, but a lot of the onlines anymore, you just pay a price per trade. So we're going to pretend that our trade fee is $5. So what you're going to do is you're going to take your purchase price per share, multiply it by the quantity of shares, and add $5. So I bought 100 shares, so this is really easy. You just move the decimal place over 2 points. So that would cost me $12,386 if I bought 100 shares. But I have to add the $5 in trade fees, and it shows up here at the top, purchase price plus fees, so it would actually be $12,391. Now, we're not going to experience a gain or loss today because nothing's happening in the market. But tomorrow, you're going to see if this goes up or down. Okay. If this goes up, let's say $1 to 124.86, you would multiply that by 100, and you would have gained $100. If it dropped to 122.86 and 100 shares, you would have lost $100. So that's how this works. And you just take the decimal amounts or the total amount of share dollars per share and how much more or less each day. That's your gain or loss. Okay. So your cash balance, well, you've just spent $12,391 out of $100,000. So if you have a calculator handy, 100,000, just so I can show you how to do this. Whoops. Ooh, my technology is not very good today. 100,000 minus $12,391 leaves us with a cash balance of $87,609. Excuse me. So if I want to buy more stock today or tomorrow, this is how much cash I have to buy. So this will keep track of how much cash you actually have to buy. Now, the total value of my stocks, since the stock market is actually closed, there's been no trade, is actually $12,391. Now, if I had more stock, I would add all of my stocks together to get the total value of my stocks, and then the cash value plus my stock value gives me my total equity. So if we add this column and this column, I'm sorry, that was my cost. The total value of my stocks was $12,386 because that purchase price doesn't go into the value of your stocks. Hopefully I'm not confusing you too much. 123.86 times 100 is 12,386. So you take your 12,386 plus 87,609, that gives us 99,995. And the reason it's $5 less than the 100,000 we started with is we lost $5 on the trade fee. But again, if the price per share goes up $1 tomorrow, which it may not, we would get more than that back. Okay. So you go through every time you buy a stock, just go through that, see the price per share plus $5 gives you the total cost. Subtract that from your cash balance, it gives you how much less. Take the total value of all your stocks, so you would add this to your next stock, and then your cash value plus your stock value gives you your total equity. Then by the end of the summer, you want this to be this number that I'm highlighting here to be the biggest number you can get. And that's basically the nuts and bolts. At least that's all we have time for. And hopefully I didn't do too much damage. And if you come to the direct instruction, we can kind of work through it some more. You could pick a company. We could work through that trade yourself. So if there's any question, please join the Google Meet. For those of you seniors who are going to be graduating, you've earned all your credits. Good luck. I wish you well. I'm sorry that you kind of had poor timing on your graduation, but you're going to have a heck of a story in the future for your kids and grandkids and everyone you meet, and it's definitely an interesting time. But as they always say, and you probably hate hearing it, it definitely builds character. For those of you who are coming back to East next year, I also want to wish you well and good luck. I am actually not going to be back next year. I am pursuing my path towards becoming a building principal, so I will be filling an administrative role in another district, and I just really enjoyed getting to know all of you. Again, I've said it in class, you may or may not believe it, but I'm out in the public bragging on you guys all the time. I think you're a really good group of students. You're going to do great things in the future. And I just wish you the best. So join me in the direct instruction. I hope to get as many of you as I can so we can have kind of a last discussion. But if not, well wishes and take care. Bye, everybody.